Yep, we probably went too far. Even Domino said it. We probably went too far. We need to readjust pricing. So many people do not believe we will see deflation in the CPI. We do. Now, I don't know exactly when it will happen, but we're hearing a lot of companies saying, yep, we went too far. The consumer staples companies were increasing prices 8 to 10 to 12% as they were trying to keep their margins in place as units declined. But I think that is turning into a vicious cycle, and they too will have to cut prices to bring consumers back from the more generic brands. We're really excited about some of the breakthroughs in the regulatory landscape when it comes to crypto, and equally excited, more excited about the research that is taking us to places that others are not yet exploring, like this convergence between Bitcoin and artificial intelligence. I was blown away by the possibilities.
Bitcoin price dips amid ETF delays. Bitcoin's price took a hit as the SEC delayed decisions on several spot Bitcoin ETF applications, erasing gains from the recent Grayscale court victory. The crypto market is in flux. Investor sentiment wavers. High liquidations of long positions and declining trading volumes have affected Bitcoin's price and investor sentiment. Fear has replaced neutrality in the market, but institutional interest in Bitcoin persists. Regulatory impact looms. The SEC's continued delays on Bitcoin ETF approvals and macroeconomic factors like interest rate policies are impacting Bitcoin's price. Market players are looking to the long-term recovery of Bitcoin. Crypto's resilience. Despite short-term challenges, the crypto market expects resilience as financial institutions increasingly embrace Bitcoin. Now, let's continue our enlightening discussion with Cathie.
What do we have to look forward to? Well, now the topic is potential government shutdown if there's no agreement on the budget. And just like with the debt ceiling, this is going to work out. We're moving into an election year, and no one wants to be seen as disrupting the government and bringing that kind of attention during an election year. So there'll be a lot of saber rattling, but we'll probably land at something in and around September 30th. And then this week we got some clarification. The IRA, the so-called Inflation Reduction Act, which we do not believe that's the reason inflation's going down, but nonetheless, we knew that that this administration was going to target drug prices, and we got the 10 drugs. They're associated with large pharma companies, and it was interesting that the stocks actually went up because most of these drugs, if not all of them, are scheduled to go off patent in the not too distant future. And so their prices were going to come down anyway. So while the administration said that the price declines would be somewhere between 20 and 60% for these drugs, and a lot of them are for the highest spending categories that Medicare is trying to control, heart disease especially. Most of the prices, when they go generic, will drop by 80%. That's what usually happens. Now, there will be more drug price cuts, but they're not going to happen until well after the election. So we don't have to worry about it right now. And if the administration were to change, there may be new legislation countering this legislation. One of the things we are focused on, though, in terms of fiscal policy is if we're right that the economy is going to have a harder landing than most economists and strategists expect, what will this administration do to counteract the bad news during an election year. And I think the bond market is already a bit on the warpath when it comes to fiscal spending. The words "out of control" seem to be bandied about constantly in the press. And I can't imagine there's going to be another layer of...
Don't forget to join us as we explore the unfolding events. Dollar share in reserves drops below 60%, UN rises, Russian diplomat says. The share of currencies other than the US dollar and the euro in international reserves is on the rise, according to a Russian representative. The trend is being observed as a growing number of countries try to use their national currencies in foreign trade settlements. A global macro strategist has explained that the Chinese yuan is unlikely to replace the US dollar as the global reserve currency. She emphasized that the weaponization of the USD is one of the top reasons why Russia, China, and other BRICS nations have been seeking an alternative to the dollar. Economist Peter Schiff has warned that Bidenomics will soon be exposed for the fraud that it is, as inflation and unemployment heat up while the economy cools down. He cautioned, "If Americans think the economy is bad now, just wait until they see what's coming. Once the dollar cracks, both inflation and interest rates will rise sharply. This will send the economy deeper into recession, causing many people to lose their jobs." That's the real Bidenomics.
Monetary policy, very interesting from Jackson Hole. So the Jackson Hole Summit is where the monetary authorities get together. And the most interesting word I heard out of it was Powell's use of the word restrictive and saying that the real interest rate was well above the neutral rate. And that defines restrictive. So half of the solution is understanding the problem. If the economy weakens as much as we think it's going to, the Fed is now getting into the mindset with the use of that word, and we might see a pivot faster than might ordinarily be the case. After all, M2 is down roughly 4%. It has been down on a year-over-year basis for 8 months, and it actually peaked 1 year ago. And as we've said many times, this has not happened since the 1930s. The yield curve is still inverted, roughly 70 basis points, and that's a harbinger of slower than expected or lower than expected inflation, or both. And we think both will be the answer there. And the yield curve has been inverted for a year now. Now, many people are probably sick and tired of this talk about any landing. You know, they're hearing soft landing, hard landing, and most are thinking it's soft landing now. We are thinking harder landing, but how hard? It's probably not, it's certainly not going to be anything like 08, 09. Why? Because we've been in a rolling recession for about a year. As you'll recall, in the first half of 2022, GDP was negative for 2 consecutive quarters. Technically, that's the definition of a recession, but we don't know when the NBER, the National Bureau of Economic Research, is how they're going to characterize this. We won't know for 1 to 3 years, I think, after the fact.
Arkham Intelligence reveals Grayscale's Ethereum holdings across 500 addresses. Crypto thefts in 2023, nearly $1 billion lost to scams and exploits, reports Certic. Cambridge revises Bitcoin mining index, lowers BTC's estimated power use. WorldCoin claims signups soar in Argentina 5K users verified in a single day. And that concludes an insightful episode of Money Talks. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.